Yo, what's up guys? It's your boy Looney. Today, the market and crypto got slammed. Everything from stocks and crypto and even some speculative names got crushed. In this video, I'm going to walk you through why this happened, what's driving the panic, and what I'm doing in my portfolio to manage this. But before we get into this video, quick shout out to the Discord. It is free to join, and I also offer a premium membership for $8 a month, and it gives you access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links that are in the description. But one of the biggest triggers today where traders are losing faith in how much the Fed will cut rates going forward. And that is due that we got strong economic data today, and some inflation worries are making investors doubt that the Fed will be as dovish as many hoped. And that creates fear, especially when so much optimism is already priced in. Markets were already stretched, and everyone is betting on that next leg up. So any shift in sentiment or hawkish vibes can cause people to take profits, and that amplifies the drop even more. We did hear that Powell himself actually said that stocks are highly overvalued or something along those lines, and he is right. And because of that, a lot has sold off. This past week, I'm down 6%. A lot of people who are leveraged are also down significant. And that's why I want to transition over to crypto, because crypto was hit hard in particular, and that is due to liquidations. There was a lot of leverage exposure piled up. So when these prices started dropping or falling, forced liquidations kicked in. And this is especially for long futures or margin positions. In crypto, we saw over 1 billion in liquidations in the last 24 hours. And if we look at Ethereum, it is down 4%, and it's under that 4,000 mark, which actually is triggering even more cascading liquidations. And it's sort of a cycle. These liquidations create a loop. There's a drop, which force liquidations, and then the liquidations cause even more drop and fear. But for myself, I am not doing too much. I buy every single day, and I only put a little bit every day. So I'm putting $3 or somewhere around there in crypto and Bitcoin and Ethereum and Dogecoin. So day to day, I'm not too concerned of where we are. I don't have leverage positions or long positions on crypto. I'm just simply dollar cost averaging. So day to day, I'm not really too concerned. Obviously, I want crypto to go up and I want it to go higher, and I'm bullish, but day to day, not that big of a concern. But I was hit pretty hard, down 3% or almost 4%, past week down 15%. So very volatile moves with crypto, which we should be used to by now. Now, crypto all week has kind of struggled, and that weakness bled into broader risk assets. So Bitcoin as well was also down. It was down. Now it's at 109,000. And many stocks, especially like crypto mining stocks like I own, are correlated with crypto. So when crypto drops, these stocks also drop. So Mara was down 9%. Riot was also down pretty significant. And yeah, crypto and Bitcoin, they pull everything down together. So these in my portfolio were also hit pretty significant. I do have some hedging, so the options I was up, but the overall position I am down. And the overall sentiment of today's sell-off is that it's a reminder. The market was overextended, and many technical gauges were screaming buy climatic, meaning we were due for a pullback. And also, we have to keep in mind that September has historically been weak for both equities and crypto. It's sort of the September effect. So today's drop could be partially seasonal rotation. So what did I do in my portfolio? Because I am down pretty significant. I am down 3%. I made a bad trade, and I'm not going to go over it in this video. I want to do it after like a month. We'll see if I want to actually broadcast what I did. But I made a silly mistake. I basically bought more contracts than I intended to by doing a fat finger, and that's why I'm down so significant. And I'm just not ready to share that right now. But in the future, perhaps I will. But it was a very embarrassing moment. But overall, I am hedged. So I do have covered calls on Oscar, Mara, and Riot. I actually have a put debit spread as well in case we did see a pullback in this time. So this one expires in a few days. And this one actually is green today. It was up pretty significantly, up $15 or 30%. And if I wait till expiration, it will be profitable, be up $37, all by just doing a simple hedge on put debit. Again, more covered calls, even more covered calls. But as for trades that I opened up today, I actually did cash secured puts. So I did a cash secured put on Open, although Open was down was up today. If you really look at it, it was pretty sideways, but it's showing that it's up 10%. So I sold a cash secured put at $5. I think that is relatively safe. Not the greatest return. I think it was like 2 or 3% per month, but I'm okay with that. I'm okay with a safe return, especially because holding cash right now is a smart thing to do. So I wouldn't say this is close to holding cash, but doing a safe trade like this, it allows me to just elevate my cash position if this expires worthless. So I have that. I also opened up some credit spreads on IBIT. I did that today. And then I believe I opened up a Mara sell put. Let me try and find that one. Yeah, I opened this one today and Mara was down pretty significant. This one is negative. I just opened it today. So not that big of a concern because when selling options, time is on your side. And I'm okay with owning Mara at this price because I own it at $16. So if I'm able to bring my cost basis down, that is okay with me. And Mara is actually one of my most profitable stocks through selling options because it doesn't move too much. I mean, it does move day to day, but on a long-term basis, it stayed within a range. And I'm able to capitalize on that with selling options. So I'm selling covered calls. I'm selling cash secured puts. I have some credit spreads. And overall, I'm in a good spot with Mara, and I'm okay with it being slightly negative on my overall position. But some stocks I bought today, I didn't buy any of Open, or maybe I did today. Let's see if I did. I might have bought some today. Today's the 25th. So no, I didn't buy any positions on Open. I just sold a put at that $5. But I did buy like one share on ASTS. And that's because it did drop pretty significant. I think I only bought one at that $48. And yeah, this one was down 9%. So this pullback kind of affected everything. And then HIMS, I did buy like 5 shares on this one. Timed the bottom pretty well. HIMS is one of those that was actually green today. And I bought it at the lows at $51. So I actually timed this one pretty good. And I'm proud of that. Other than that, I just kind of sat in my hands. And I did make a few trades. So these trades were a lot more bullish trades, I'd say, because I do feel I'm pretty hedged to the downside with my covered calls and some spreads I also have open as well. So if things fall further, I will look for more entries on names I like. I'll probably stay with the stocks that I already own. I'm not going to try and get into new positions. Actually, there is one position that I did open that is new, and that is Zeta. I've been trying to get this stock, and it went down under 20 for a snippet, so I opened up a cash secured put on this. So if Zeta goes to 17, I'm okay with owning it and start a position. I don't want it at 19, even though I think under 20 is a good deal. I do want it even at a lower price. So that's the only new position that I did open. I have Archer, that's kind of new, but I went over this in another video. This I didn't open today. But so yes, today we did have some strong data shifting Fed expectations, forced liquidations, and overall crypto domino effect. And there's very overbought sentiment all collided today. The result of this was a broad dump across crypto and markets. And this doesn't necessarily mean crash mode, but it is a reminder that markets don't move in straight lines. And even in bull runs, things can get messy fast. So overall, manage your risk, don't over leverage, and use hedges or protected trades to survive the volatile days. Until next time, peace.